Kathryn Rooney Vera, what do you think was behind this sudden turn? I mean, for small caps to have their best week in 2.5 years, that stands out.
Yeah, and it's partly a relief rally. I think Greg alluded to it. Powell sounded somewhat dovish, at least the market took it as such. The non-farm payrolls report showed that the labor market is finally turning, and the markets got pretty jazzed that the Fed may not hike in December, but may cut going into 2024. The Treasury said they would slow the pace of quarterly debt sales, so that was good from a supply perspective. But what I'm telling my clients at Stonex, Brian, is that because bond yields decline or drop, that doesn't necessarily mean that equities should continue to rise, especially if bond yields are dropping because we're going into recession. So I think we really have to come down to, is the soft landing, which is currently discounted to the markets, reality? I think it's a historically low probability event. I think the biggest risk to the bond markets, which I have an overweight recommendation on fixed income, the biggest risk to that call is that this positive correlation maintains itself between equities and fixed income.
Do you think the 2-year bond, back to you, Kathryn, do you think the 2-year bond bear market is over? Did it die this week?
I think it's a really good bet to buy rates, especially in the short end of this. I think the Fed is done, and it's more likely than not that we do enter into a hardish landing going into 2024, in which case the Fed probably does have to cut, but it's not going to cut unless something breaks, Brian. It's just not going to happen. So something has to break. We have to see the labor market roll over further or consumption contract.